Hello there. My name is Fernando Cipriano, and I'm the co-CEO of AlphaBlock. And thank you again for joining us today. We're going to talk today about how our artificial intelligence machine learning actually selects the individual stocks, in this case, the stocks of the Barometer Fund in the actual fund. Now, as I've said before, our technology, this artificial intelligence, is a machine that can be very much adapted to anything that a money manager, a wealth manager would like us to deliver returns on. So for example, we have some clients that want a European equity fund. And so we feed the machine the data on the European equities, and then the machine just starts to work in the selection process. In the case of Barometer, they were looking for a global equity fund ex-US. So using every possible international equity stock, but without any allocation to the US market. Now, because the machine at that point would have taken any stock in the entire universe, Barometer didn't want to deal with smaller cap or illiquid stocks. So instead, they said, we want to put some extra limitations on the universe so that the machine could actually pick the stocks that they wanted in their funds. So in the case of Barometer, what they said to the machine was, we would like to have a large cap global equity fund. So that means that they would put a minimum market capitalization of the underlying companies so that they were sure to get only the biggest companies globally. Then the second thing they wanted was, they said, let's make sure that all of these companies have a lot of trading volume. So not only are they the biggest companies, they are also heavily traded so that there's a lot of liquidity in the marketplace, such that if they had to make a change in the portfolio, they would be sure to be able to make the change, even if the fund grew into a very, very big fund, and not worry about illiquidity or having to sell a few shares each day without moving the market. The third thing they did was, they said, we want a very diversified portfolio. So we'd like to have the number of stocks within the global equity fund ex-US number 80. That means they wanted 80 companies, all equally weighted. So that was the fourth limitation they wanted. They said, don't let the machine pick the weightings. Instead, have each weighting be equally weighted so that all 80 companies will all be about 1.25% size in the portfolio. So in the end, what we created was a global equity fund ex-US with 80 of the biggest companies worldwide that everyone will have heard of, that have a lot of liquidity so that we can trade them every day if we have to, and that no one security, no one stock has a big weighting that could have a negative impact if that were to go badly. So that is how we built this fund. Now, what's interesting about our AI technology is that it responds to whatever requests our clients have, as I said. And so that we can build a crypto fund if that's what our clients wanted, which we did have a client that wanted that. And as most of you know, the crypto market is very, at times, inefficient. So there's illiquidity in some of the coins that are poorly traded, but our client was willing to accept those risks. So we built a fund that was catered to that. But in the case of this Barometer fund, we didn't do that, as I mentioned. And why is that? Why did Barometer choose their fund to have these limitations of 80 names, highly liquid, no big weightings, rather completely diversified? They did this because they wanted this fund to be very, very scalable, so that as it grows, we never had to worry about running out of spaces or places to put the money into. And so when you're dealing with 80 of the biggest companies in the world, the fund can grow into billions of dollars. And that's Barometer's hope with this fund, is that it will scale up into a multi-billion-dollar fund. And the best way to do that is if it is investing in the biggest companies with a lot of liquidity. And so, as I said, our machine responds to all of our requests. It is no different than, an artist that can really paint anything. If you want the artist to paint a bowl of fruit, they'll do that. And if you want it to paint the Mona Lisa, it can do that as well. And in the case of our funds, many of them are the Mona Lisa. We as I mentioned before, our technology has outperformed the benchmark in all of our mandates year after year in a very repeatable and scientific way. And for those of you that know the marketplace, that is a challenge that most money managers fail to achieve. In fact, every single day, every single year, about 95% of money managers fail to beat their relative benchmarks. And yet at Alpha Block, all of our mandates outperform their benchmarks year after year. In fact, I just read this week in the Toronto Star on Saturday that the Canada Pension Plan, a fund that you all know, that we all contribute to, and has thousands of employees all trying to build a portfolio that could beat their relative benchmarks. After 18 years, in the last 18 years, had the Canada Pension Plan simply invested in the benchmark, both the stock benchmark and the bond benchmark, it would have delivered $42 billion into the fund. Instead, it underperformed over 18 years, and that underperformance has delivered that $42 billion less than they would have if they just had no employees and just put all their funds into the benchmarks. That's what we're changing at Alpha Block. We're saying there is a way, and that way forward is artificial intelligence. If you have any other questions, please reach out to us. Thank you for your time today, and I look forward to speaking to you again.